Hey traders, this is Jason with Day Trading Fearless, and this is the weekly watch list for January 29th, 2023. We're going to go over what's going to be happening this week, so be really careful. This coming week, there's some major news events. The first thing is we have the Fed announcement. They're supposed to raise 25 basis points. I'm going to go out on a limb and say they actually may raise 50 basis points to cool down this market. Market feels very bullish. And then on Friday, we have the monthly job numbers for January. So a couple market moving events. Last week, I actually was very bullish. I said we're probably going to rally, do something like this, and then potentially fall back through. Okay, we could see how tight this kind of wedge is getting. And usually when you're about 75% through a wedge, that's usually when it'll break out. And we'll see if it breaks out and then reverses, or breaks out, holds, and keeps going. I think they'll probably do a 50 basis point. Will rally early into the week, and then maybe even spike up, probably get back to this high, which is right around the 4170 level. And then potentially, if the Fed really kind of down talks the market, they may push the market back down. So just something to be very aware of this coming week. But for the early start, I am bullish. One other thing is, whenever you see patterns like this, right, where it looks like it's going to break, we have 1, 2, 3, 4. This is our fifth touch, okay, over the last year. Normally, I would be very bullish on something like this, because we also have a inverse head and shoulders, right? Here's our left shoulder, the head, and then the right shoulder, and then this would be essentially a slanted inverse head and shoulders where we break out to the upside. The one thing is the Fed is been saying they're going to go up into probably the mid fives overshoot on the interest rates. We're only at, I believe, like 4.25. So we still have almost another whole 1.5 or probably 125 basis points higher that we could go. So does the market, or does the Fed come out and down talk this market? Something to be very aware of, and all that. So, okay. But hey, real quick, if you guys want to help support my channel and also get some education and knowledge, then do me a favor and go to my website, daytradingfearless.com, or the link down below, and you could get my lifetime subscription, one-time payment, $99 of my S&P Emini weekly trade zones, and also my 7-hour video course where I teach you how to trade and all that. So these are this week's trade zones. I'm kind of giving them away for free if you want to pause this. But they kind of work really good this week. So make sure you guys check that out. Also, there's also a link down below with if you're looking to get funded for trading futures, elite trader funding. There's a link down below, 50% off coupon. But let's get right back into the video, and let's now take a look at the NQ. Real quick, NQ's been kind of rallying. We're breaking out above all this, right? We could see this is actually breaking out. We actually had more of a double bottom, stopped right here at the 200. Again, maybe it rallies a little more. We also have a lot of tech earnings coming out next week, so be careful. But definitely, if we do keep going higher, watch this 13,279 level. It's the point of control on the NASDAQ. So Crude oil / CL. Crude oil, it's still kind of inverse head and shoulders right here. Right now it's shoulder, head, shoulder. Lots of inverse head and shoulders. Usually when you see inverse head and shoulders, markets are bullish. When you see a lot of head and shoulders, markets are bearish, right? It's a good gauge. But I actually, I'm bullish, but it can't break out. If it breaks out, I think it's off to the races back to 100. If it fails, we're coming all the way back down probably to the 70 level. But remember, at that 70 level on crude oil, the U.S. government's a huge buyer to replenish the reserves. So something to think about. Bitcoin, BTC. Bitcoin's been on a tear over the last few weeks. Again, I'm sticking with my thesis. I still believe we're going down to about 11,000. This is potentially just a bounce, okay, within a bear market, but we will see. This is probably your line in the sand. Maybe if the overall market kind of reverses, maybe it brings Bitcoin down too. So just something to be aware of. If it does keep going higher, I would definitely watch this 26 level, the high of the gap from all the way back in June. So just something to keep an eye on. If you're long, maybe look at taking profits there. If you're kind of day trading or more swing trading this thing. Let's take a look at gold. You guys know I've been bullish on gold. If anything, I would probably come over here, grab a Fibonacci, go from high to low, right? And maybe we get a pullback. I would probably definitely be watching this 38% for any type of pullback. Again, market falls, this may fall with it. So just something to be aware of. Also, silver, bull flag, kind of going sideways. Same technique, just grab a Fibonacci, go from low to high, and look for the 38%. Look at that like magic. What's there? The 200. Can't make this stuff up, right? Things are too perfect in the stock market sometimes, in all markets, right? And then finally, AAPL. Apple got up to 200. We're right below the point of control, so maybe it churns, goes up a little bit, and then reverses and just kind of churns. But again, remember the Fed, do they talk down the market next week? Something to kind of be very aware of and all that. I'm going to leave leave you guys with Amazon. I told you I've loved this from the first day. Loved it right around the 81 level, and guess what? We're already up at 102. So up 25% for the year. So hopefully that helps, guys. As always, thank you. Make sure you guys like, subscribe, check out my website, and check out my S&P weekly trade zones and also my video course. So thank you, and we'll talk to you soon.